Nifty Small Cap 50 Index Fund NFO. Will this NFO fund help you create wealth in the long run? Is it worth investing? Let us see in detail in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make right financial decisions and to reach your financial goals faster and smarter. So what is Kotak Nifty Small Cap 50 Index Fund? It is an NFO index fund, which is a mutual fund that invests in the Nifty Small Cap 50 Index. So in short, it's an open-ended equity scheme which tries to replicate or track the Nifty Small Cap 50 Index. This NFO is open to purchase on 16th March 2023 and the end date for purchase is 29th March 2023. Now let us see the key features of this NFO fund. As I said before, it's an open-ended equity fund. The benchmark index this fund tries to replicate is the Nifty Small Cap 50 Index DRI. It has plans for growth and the entry and exit load is nil in this fund. And the minimum application amount is 5,000 rupees if you want to start invest in this NFO. But if you want to start investing in this fund in a minimum SIP amount, that is 500 rupees. And also the risk involved in this investing in this fund is very high. The fund managers are Mr. Devendra Singhal, Mr. Satish Dontapati and Mr. Abhishek Bisen. The primary investment objective of the scheme is to replicate the composition of the Nifty Small Cap 50 Index and to generate the returns that are similar with the performance of the Nifty Small Cap 50 Index subject to tracking errors. However, there can be no assurance or guarantee that the investment objective of the scheme will be achieved. The key facts to know about this NFO fund is that Nifty Small Cap 50 represents the top 50 companies selected based on the average daily turnover from the top 50 companies selected based on full market capitalization in the Nifty Small Cap 50 Index. So the primary objective of this fund is to capture the movement of the small cap segment of the market. And the Nifty Small Cap 50 Index is computed using the free float market capitalization method. From your screen, you can see the various sectors represented in this NFO fund. The most allocation given to a sector is the financial services sector by 24.21% and the least allocation given to a sector is the oil, gas, consumable fuels by 0.42%. This is a well-diversified investment portfolio. But now we have to look at the returns this fund might potentially give you in the long run. Because whenever we invest in something, the returns is the most important factor to consider while investing. So the total returns that this fund has performed over the past 1 year is only at negative 7.67%. And in the past 5 years, it has performed at negative 0.29%. And since the inception of this fund, it has generated only 9.46%. In the short term, it has been volatile, but in the long term, you can say that it has given you a decent return, but still overall, if you look at it, the volatile return does not seem to produce you with inflation beating returns in the long term. So it's a factor to consider before investing because this might not even potentially give you a good return to beat inflation in the long run. Now let us look at some of the pros of investing in the Kotak Nifty Small Cap 50 Index Fund. So this has a diversified portfolio as I have mentioned before with investments in stocks from various sectors. So it will be suitable for investors who are aggressive especially and is looking for a small cap exposure in their investment portfolio. And this fund is especially free from any fund manager bias as it's a passive fund. And the long-term investment in this index fund have got potential to give you capital appreciation. But as it is managed passively, it is expected to have lower expense ratio than actively managed mutual fund schemes, which would be a good advantage for you. Now let us look at some of the cons of investing in the Kotak Nifty Small Cap 50 Index Fund. As I have mentioned before, this is really suitable for an aggressive investor looking to take risk and especially who wants to have a small cap exposure in their investment portfolio. But it is not suitable for a conservative investor because as it involves in small cap companies which has less stability and more volatility, which will reflect on your investment portfolio. As an index fund, this may underperform its index due to certain factors, and this fund will not be able to deliver market beating returns. And another disadvantage is this fund cannot change the allocation dynamically compare to suit itself based on the market outlook. Suppose the market is currently performing differently, it cannot change it according to that. It has to replicate the index, so it cannot change anything dynamically, the allocation. So there is that disadvantage, and there is no analysis of the underlying stocks nor any research of the company in which they want to invest, which has not been transparent. And also compared to active funds, we cannot take any calculated risk by analyzing all the stocks and only choosing the best stock to invest in. The major drawback for investing in a passive fund like this is the index fund investment is tracking error because it may not perfectly track your index. And as an index fund, it is not flexible nor will it be able to take any course corrective measures during the correction or market crash, which may reflect negatively on your investment portfolio. So finally, to decide if it's worth investing or not, let us look at some of the main points from this analysis. This fund is suitable for aggressive investor who is not willing to invest in actively managed funds but still wants to take some risk. And for investors who are looking for large cap or mid cap exposure as well in their investment portfolio, this fund will not be suitable for them. And long-term investments in actively managed portfolios can produce better returns than a passive fund like this NFO. And if you do want to invest in an index fund which is passive, there are already existing similar index funds with less expense ratio and less tracking error. So investors looking for investments that can beat the market should avoid this fund for now. If you have any doubts regarding this product and will it be suitable to your investment portfolio or not, you can always consult with your financial planner for better results. If you have any doubts regarding the topic we have discussed in this video, please comment so we can get back to your queries quickly. Also, if you have any doubts regarding mutual funds or any insurance policy in general, then you can always book a complimentary financial consultation with one of our financial planners to discuss about it, and the link is in the description to book your appointment with us. And if you want to gain more knowledge regarding financial investments and personal finance in general, we also regularly conduct live webinars for which also you can register by clicking the link in the description. Also, if you like our content, please like, share and subscribe to our YouTube channel. Thank you.